Today I would like to analyze Monster Beverage, one of the leading energy drink companies in the world. And when we're going to take a look at the stock price, we can see we are up 46% in the 5-year chart, but we also are down about 17% from the all-time high in 2023. So we're going to take a look at the financials to find out if this company is undervalued right now. The first thing we can recognize about Monster Beverage is the market cap of 48 billion US dollar. This is the current stock price multiplied with the shares outstanding. And we can also see we do not have a dividend. Now we're going to take a look at the financial foundation. The first thing we are looking for is revenue growth in the last 5 years. We want to invest in a growing business. So we can see here 2020 the revenue growth was close to 10%. Then 2021 around 20%, then 2022 around 13%, then again 2023 around 13%. This is a good revenue growth, we have to say, and we not have a revenue decline, and in 5 years it's looking really good. So for me it's a check here. The next thing we are looking for is free cash flow growth in the last 5 years. This is very important because the free cash flow can be used to pay back the debt, to pay the dividend, to buy back their own shares, or to invest in the business. So it's a very important number. We can see here in 2019 it was around 1 billion US dollar. Then we have around 30% increase. Then we have the decline again in 2021. So probably the increase in 2020 was related to the COVID, I would say. And then we have a decline again in 2020. And then we have an increase again in 2023. So we are around 1.5 billion in 2023. So overall, it's an increase in the last 5 years. It's a check here. The next thing we are looking for is free cash flow yield over 4%. This also tells us about the valuation of this company. So if it's under 4%, it could mean the company is overvalued. Of course, we have to consider as well if a company can grow the free cash flow many years in a row. It's also okay to have a free cash flow yield under 4%. So what we're going to do now is we're going to take the free cash flow in 2023, the 1.5 billion. Then we're going to divide it with a market cap of 48 billion. And then we're going to get the free cash flow yield. So the free cash flow yield we get is 0.031, which means 3.1%, which is not so bad. Of course, it's under 4%, but if they can keep growing the free cash flow in many years, then it's okay valuation, I would say, based on the free cash flow yield. But still, it's not a check here. We not have the extreme undervaluation, I would say. The next thing we are looking for is debt to free cash flow ratio under 5. This means the company can pay back the debt with the free cash flow in under 5 years. So it's very important because if a company has too much debt, it could risk to go bankrupt. So we don't like to see that. The first thing we're going to do is take the short-term debt. It's around 17 million. And then we're going to take the long-term debt as well. It's around 48 million. And then we're going to divide it with the free cash flow that we had. So as we can see, it's already looking quite good, I would say. So it's around 0.04. This is a great number. It's really good. In under 1 year, we can pay back the debt with the free cash flow. So this is incredible, actually. And it's a check here. We're also going to take a look at the cash on hand that they have. And we can see here in 2023, they had around 3.25 billion, which is a good number. They can use this to buy back their own shares, to invest in the business. So actually about the balance sheet, this company looks really, really good. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We really like to see that, especially if we think the company is undervalued. So it can help the stock price to increase again. And we can see here, it just shows from 2023 to 2025. But they did buy back their own shares. The shares outstanding did decrease. And we're going to see here as well purchase, here, repurchase of common and preferred stock. They did buybacks in 2019 and as well in 2020 until 2023. Yeah, they did buybacks many years in a row. So they're using their free cash flow to buy back their own stocks. This can help the stock price to increase. So I like to see that they have a good balance sheet as well. So I think they can afford that. So it's a check here as well. I would like to give my conclusion about this company. So let's start with a positive. They have a good revenue growth many years in a row. They have a free cash flow growth in the last 5 years. In some years, they had a free cash flow decline. We need to mention that as well. The balance sheet is looking really good as well. Low amount of debt, good amount of cash on hand, which they can use to buy back their own shares, pay a dividend, or to invest in the business. They also had buybacks many years in a row, so this can help the stock price to increase. I'm also wondering that the stock price increased 46% in the last 5 years. I think with the many buybacks, the stock price could increase even more. The free cash flow yield around 3.1% is not very high, but if they can grow the free cash flow in the future, it's also looking more undervalued in this situation. What I would say more negative, there are other brands that maybe have a similar price and similar value. So I would say this could be something to consider. If you really believe in Monster Beverage as a strong brand, then I think it's a good investment. But it's really about how you believe in this company. From the financials, this company looks very good actually, in my opinion.